Hey everyone, welcome back to Corporate Decoder, the place where we tell you what companies are really doing based on the official documents. Today we're diving into some Vanguard funds, which I know sounds about as thrilling as watching paint dry, but trust me, even paint has layers. In this video, we will pull apart Vanguard WHITEHALL Fund's latest shareholder report to uncover hidden meanings and insights behind the numbers. What we are looking at is basically a report of their financial results and activities for the 6-month period ending in April. So that's roughly November of last year to April of this year. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss company internals. Vanguard is a huge investment firm, and this report covers a range of their funds. We're talking about funds focused on international growth, dividend growth, global value, high dividend yields, and international exploration. Think of these as different flavors of investing, each with its own strategy. Let's start with the boring, legally required part. The cost of investing 10,000 in Admiral shares was 22 over the last 6 months. It also tells us how the fund performed. First, the fund's net assets totaled $1,083 million, a little over $1 billion. It had 28 portfolio holdings, which means it's not spread out across tons of different investments. The turnover rate was 10%, indicating the fund didn't do a ton of buying and selling of its investments. Where was that billion-dollar pie sliced? Over 27% was in Asia. Almost half, 46%, was in Europe. Over 22% was in North America. South America barely made the cut with 1.6%. The rest is other assets and liabilities. So mostly Asia and Europe, that's where your money was working. Now we'll see what assets and what liabilities this fund actually holds. Here the accountants tell us what the fund owned and owed to others. So let's jump to the good stuff. They had total assets of about $1,086 million and owed $3.9 million. All that adds up to a net asset value per share of just over $10 and share. That is basically the value of each unit you own in the investment. Here's where it gets tasty. The investment securities changed in value for an unaudited gain of nearly $15 million from selling investments. But the overall value of the fund actually went down by almost $400,000 on the income side. So how did the International Growth Fund do? The total return was about 4.8% for 6 months. For comparison, past year was a whopping 48%. You have to keep in mind that past performance doesn't predict the future. Next, we're moving on to the Dividend Growth Fund. Hopefully that did better on income, same story. Let's see recent fund data. This one had fewer investments, 26 to be exact, and total assets of only $25 million. The turnover rate was higher, 25%. Their investments were largely in infotech, close to 30%, financials at nearly 25%, and healthcare at around 12%. It's a bit concentrated towards tech. Now we'll see what assets and what liabilities this fund actually holds. Here, the accountants tell us what the fund owned and owed to others. They also tell us that April they determined the net asset value per share to be almost $28.50. What income did they earn in the last 6 months? About $6.2 million from dividends, which is great, and a small amount from affiliated interest income. What did all expenses add up to? $1.5 million, so pretty low, which meant this fund earned $5.2 million in income. Great. But then it got ugly. The investments lost to $21 million, with total decreases in net assets over $22 million. Not good. Putting it all together, the fund lost 2.66% in value for the last 6 months. Despite that nice dividend income, it pays to look behind the highlights. Let's move on. It sounds like this fund is looking for deals all over the world. They have far more holdings than the previous 2 funds. We are talking 114 individual names. The fund has net assets of well above $1 billion. Also, the rate of turnover of their portfolio jumps up to being 33%. How did they spread out their assets geographically? Just under 60% was in North America, about 23% was in Europe, and about 17% in Asia. Now we'll see what assets and what liabilities this fund actually holds. Here the accountants tell us what the fund owned and owed to others. Their net asset value per share was just over 26. This time the news is better. These investments earned $15 million. Like the international fund, it had some smaller value swaps. Total expenses were pretty low, around $2.6 million, and then we find the bad news. This fund lost about $56 million. Total decrease in net assets was almost the old $355 million. The total return was like a flat tire, losing almost 0% for the last 6 months. Almost 3% loss in value and a bumpy rate. Okay, so this fund has a cooler name than the rest. It has HCF 1.3 billion in assets and a significantly higher number of holdings, 366. The portfolio turnover rate sitting at 47%. It's more actively managed than the index ones. Geographically, it goes 40% in Asia, a little bit more at 46% in Europe, a tiny amount in North America, and a little bit in Oceania. They explore a lot. Now we'll see what assets and what liabilities this fund actually holds. Here, the accountants tell us what the fund owned and owed to others. Their value per share was determined to be nearly 18. What did this Explore fund earned in that time? 717 million. As usual, Vanguard kept costs low, spending less than 3 million. But unlike the income statement from earlier, the market downturn killed their gains. These funds took a nearly 6 million hit and realized gain loss of almost 50 million. In a perfect circle, we see that total return as a result decreased. Not a great sign for professional fund managers with decades of experience, but that's just part of the deal. Finally, what about the money everyone wants, a high yield? This is where you get dividends. Vanguard is generally a low-fee brokerage, so perhaps this is a hidden gem. The fund has far more assets than any of the other funds we've talked about today. Also, that is a whole lot of holdings, 591. So this fund is highly diversified. So how did Vanguard deliver? This time we get two return highlights, ETFs and Admiral shares. They are both pretty much the same. For the last 6 months, we see close to a 1% return, and for the past year, 51%. Total investment has 70 billion. Their income was over 1 billion, but what does that really mean? The 4 billion loss on investments, so not good. Overall, a very mixed set of results here. Now, looking at these results more broadly, Vanguard's high dividend yield index fund is popular because of the size and diversification in it. In general, the funds discussed didn't lose a ton when looking at their last 6 months. All funds continue to pay dividends, though it's also worth mentioning how investments can also have losses as well as gains. As always, remember that at any brokerage, you can lose all your money. Alright, that's our breakdown of Vanguard's latest filing as of yesterday. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.